Hi, everybody. Nema Daghbandan here with Geraci LP. As you know, we've been reporting on this case called In Re Moon. For those that don't know about this case, it deals with this really novel issue related to Department of Real Estate brokers. And so what it says is, if a loan is made or arranged by a licensed real estate broker, it's exempt from usury. And we all know that rule, and it's been around forever. But there's another part of that same statute that authorizes that exemption to usury, where it talks about modifications and forbearances. And when we deal with modifications and forbearances, that made or arranged by a licensed real estate broker is different. What it actually says in the statute is it starts talking about a modification or forbearance by the listing broker involved in the property transaction. And anybody who's in the real estate industry will go, that makes no sense. Why on earth would a listing broker have anything to do with a loan modification? They're not even mortgage industry. And so for the longest time, we've all taken that for granted, and we just assumed that as long as the loan modification or forbearance was negotiated by a licensed real estate broker, that it would also be exempt from usury. Well, the In Re Moon case took a look at that statute, and the court read it literally and said, well, no, it doesn't say that. It says that it's got to be the listing broker. And what's crazy about the Moon case is what the lender did there is they actually reduced the interest rate. They didn't increase the interest rate, but it was above 10% even after the reduction. Even though it was a reduction, they still said, well, doesn't matter. Above 10% without a usury exemption is now a usurious loan. And so that's what's being fought over right now. So you have both what I would call a sloppy piece of statutory writing, and you also have a court that has to kind of determine, am I going to be practical and read this as it probably should have been written, as the way we all kind of assumed it to be understood? Or am I just going to read the statutory language exactly as written and apply the law and say, as legislator, if you wanted something different, you could have written something different, but you chose not to here, so I'm just going to follow whatever the statute says. For those of you that are affected, which means literally every single real estate broker works within the mortgage industry, you really should be concerned about this sort of initiative going on here, because until this changes, basically, is it's really, really perilous to write loan mods unless you're a California finance lender in California right now, which isn't everybody. And it's going to cause a lot of friction. So either there's a legislative solution, which hopefully we'll be working on as well, and that's why I would definitely recommend people donate to the California Mortgage Association PAC so that you can fight the legislative side of it. And we'll see whether the court's going to put on their practical hat or whether they're going to say is, hey, if you don't like the law, go fight the legislator.